Fundamental analysis can be very scary. I mean, the very first time I heard of it, it was a lot. Like, you have to learn this news, hear this news, understand this news, this economic data release, geopolitical release. It was a lot. But over time, I've come to realize it is not as big as it seemed when I started. And if you are just starting to trade, obviously, it may seem like it's a very, very huge thing. However, over a period of time, I've come to realize that there's a very, very smart secret to it. A lot of this information can actually be automated, or rather, calculated simply. If you don't have a way to automate it, then you can calculate it. I'm not here to sell you some automation AI, some tool that will suddenly make you rich. That is a lie. What is going to make you rich is your ability to read the market by yourself. Not some Forex guru, not some Forex mentor, not some tool, AI tool, or whatever that's going to make you rich. No, it's the ability to use the tools right in front of you to the best way you can. And in this video, I want to be showing you a dashboard that took me over 9 hours straight up. I sat down from 2 o'clock in the afternoon till past 9:10 or so before I was able to achieve this dashboard. It's going to look cluttered, but by the time you understand the detail behind it, you'll realize this dashboard does fundamental analysis for me in a very, very fast, easy, and smooth manner. Yes, sometimes it may be wrong because sometimes some situation that may support or should be bearish is actually bullish. It may be wrong, but 80% of the time it has the information all correct. Now, without further ado, let's head into it. So if you're out there and you want to see what Forex trading really looks like, this is the channel for you. Like, trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into Forex seriously and also has a 9-to-5 job is like. This is literally the whole shebang. So before we head into the dashboard, I want to say to all my new viewers, if you're new to this place, you are just seeing this video for the first time, I want you to go down to the comment section and tell me, what markets do you trade? Do you trade the Forex markets, which is currencies? Do you trade the metals, futures, or commodity, or agriculture, which is, food and energy? Whichever one you trade, just go down to the comment section. I want to know what you trade, and then also I want to know how you trade it. Do you take account of fundamental situation, or are you just purely technical? Just go down to the comment section, tell me hi, tell me what you do, how you do it, and I'll reply you. Obviously, definitely I will reply your comment within 24 hours, for sure, within 24 hours. Without further ado, let's head into it. Do well to hit the subscribe button before we continue. Now, this is the dashboard I have right here. It's 3 dashboards, but there's a lot. And it looks very, very complicated. This is because you are seeing it for the first time. So many numbers, so many lines, so many colors, but they're actually just 3 colors. I mean, if I put it down here, you'd see it's just 3 same colors over and over and over again, repeatedly on the 3 places. But what are these 3 places? Now, I have the economic situation as of now, which is a collection of every news right now. And then I have a 14-day situation, which is the middle chart that has to do with in 14 days, in the past 14 days, what has been happening? Is it still heading in the same direction as the overall, or it's changing direction? And then in the changes is the last one. So I can easily tell if the changes is occurring just by looking at the changes before I even look at the 14 days and the overall. Economic data, as we all know, is a lot. Picture this. Take yourself as one individual in an entire economy. This is what happens. For you to be able to do anything, you need cash. Or rather, for you to be able to purchase anything or pay for anything, you need cash. For you to have cash, you need a job. Hence, starting from the beginning, you need a job to do anything. It means you're going to go out there and go find a job. Then you move on to make money from that job or whatever it is you are doing. For example, you're a carpenter, you're a tailor, whatever it is. Whatever you're doing, you make money from that thing, and then you go spend the money to acquire things, either investment or just purchases. Probably you want to buy a house, you want to improve your happiness, you want to improve your quality of life, style of life, whatever it is, no judgments, but you just spend the money to acquire something, either investments, positive or negative. When that money is spent, the economy is either getting better. Now, this is just for you. Imagine this on a collectively ground of everybody in the economy now having similar situation. So what we are now having is a lot of people have jobs, either working for themselves or working for a company or whatever. But a lot of people have jobs, and because they have jobs, they can make money. Because they have money, they can spend money. And when they spend money doing what? Buying things produced by people in jobs of other company. Now, because a lot of us have jobs, a lot of us are spending money buying things. Cost of things are going to go up. Obviously, supply and demand, because we are demanding it constantly. Supply is going to be going down and price is going to go up just like that. Supply and demand keep going up, keep going up, keep going up. However, there are still people who do not have money, or rather who do not have jobs to contain the whole situation. Hence, when things start to go up too much, they can no longer afford it. There are people who also have jobs, but their job is low paying and they can no longer afford those things. What happens? CBN or central bank steps in and then, caps price by putting higher rates or lowering rates to increase production and cost. Now, what happens here is we have 3 stages. We have the first stage, which is the job stage, which is the beginning of the situation. I'll call it the leading. Then we have the second stage, which is the spending stage, which is now the incident. So you spending is an incident of the fact that you were able to make money from a job or something you did, right? So that's the incident. And then there's the lagging, which is totally based on the last 2, which is the CBN coming in and telling you guys, okay, we're going to increase interest rate because inflation is killing us. Everybody has job and the inflation is killing us. Or there's little bits of job, but price of things are way too high. Let us cut rates so that people will be able to, companies can be able to borrow money. When they borrow money, they will be able to produce more. Because they need to produce more, they will have to open more jobs, employ more people. It's a circle. It's a big circle. However, what I'm just trying to say is there are some economic data releases that has to do with information that leads to something. And then those things they lead to are the incidents economic data. And then also the economic data that reports on those particular things too. And then those 2 things, which is the thing that caused the incidents and the incident together, because of the way they are and the situation, the relationship, if one is higher than one or one is too low, one is too high, then government jumps in and then other situation also happens alongside, which is the central bank coming to say, hey, cut the rates. That is the lagging. That is all I have here on this dashboard, which is, you can see I have leading score, coincidence score, lagging score across the 3 different charts. What I just did is I collect all the leading news, all news that has to do with leading factors, and sum them up into one. I have all the news that has to do with incident factor summed into one, and all the news that has to do with lagging factor summed into one. So this way I can read the economy if the economy is about to start growing, if the economy is currently growing, or if the economy has grown and is now contracting. That is what the whole situation here is. Now, reading it from here is quite bogus, right? It is a lot. I mean, this is every single pair in the market, not every single one, just the majors and minors, major and minor pairs in the market. And just going off here doesn't give you as much information. Hence, I created a new page called Overall Pair Analysis. Now, apart from the fact that we can say, for example, the Australian dollar, Canadian dollar, we can say, oh, it has like really good leading score, including the last 14 days, it's been getting stronger. What really is getting stronger in those set of news, right? And then I have this thing called pair analysis and variance. Now, in pair analysis and variance, what this does is it tells me the degree to which there is difference in this news. To explain that, I'm going to have to use something that has like big variance. So for example, take a look at the Euro Swiss franc. The leading score is leaning towards the euro more. Oh, I forgot to mention this. So the percentage is based on bullishness, basically. 50% and above is bullish, 50% and below is bearish, around the 50% is neutral. So when you see this thing saying 35.78%, like right here, what it means is it is bearish. So it's leaning towards the Swiss franc. That is what it means. So the leading score here is saying Swiss franc is stronger in terms of leading information. But the lagging score, that's not nice, that's a mistake. So the coincidence score also is leaning towards the Swiss franc, but the lagging score is heavily relying on the euro, meaning the European economic government right now is setting up a situation whereby these two should start getting bullish, while the Swiss franc is losing on that end in terms of the news available. Now, what this variance means? That variance means that the degree to which all the informations are in line with each other. Like in this case, you can see these two are bearish, this is bullish, and it's not in line. Compared with something like the Australian dollar, New Zealand dollar, where these two are both bullish, this is slightly bearish, but less bearish. Or you compare that with things like the Australian dollar, Canadian dollar, where you also see they are all bullish, meaning they are all leaning towards one side for the market. Now, this variance tells me, okay, this market is yes, the information is saying I should be buying this currency, but the deeper dive into it is saying there's a slight chance it might not work well if you go in. There's like a probability. Trading is all about probability. Now, this is not just enough. We need to take another deeper dive, and we do that by going into overall situation. So in this case, I'm going to pick up the Swiss franc against the euro, which is what we're looking at. And here we can now see what is really happening. How real degree, like to what degree really is it really happening? And we can see that the euro overall situation and then the 14 days changes situation. The overall situation here is clearly, right? It's clearly stipulating craziness, which is, you can see the overall stipulation of the lagging indicator of the euro is very strong. And in the last 14 days, it is very, very strong, meaning most of these changes occurred within the last 14 days. Like within the last 14 days, that strength came up very, very obvious. As compared to the Swiss franc overall is strong in terms of the leading indicator, but in the last 14 days, it's been weakening. So you can see weakness showing up here. Same thing with the coincidence information. The coincidence is severely weakening for the Swiss franc, very, very weakening compared to the overall. This is going to lead to overall situation dropping even harder. Something you need to take note of is other information, such as the fact that Swiss franc is by far the most stable economy. I've said this multiple times on my channel. Apart from, they don't have as much economic news out there, hence you may be reading it quite wrong. So whatever I read from Swiss franc, I am always far more careful. So let's go into the euro Swiss franc and see what it looks like. And you can see the euro Swiss franc, the same currency that said, this same currency that says, where is it? It says, now this same currency that has its indicators, current situation and everything saying bearish, and still telling me that the lagging indicator is likely going to start printing strong stance soon. Right now it is bearish. That is what it means. It is bearish. And then you come here, you see that it is actually bearish, but it is at a possible resistance area. Like you can see, price is not moving drastically in the last set of days around here, and you can see it clearly. That move is just not, it's just not moving in any clear direction recently. Compare this with the Australian dollar, Canadian dollar, which is telling you clearly bullish. You can see all the indicators all saying highly bullish, highly bullish, highly bullish, and the change is even printing more bullish strength. Compare that against the charts. Let's go to the Australian dollar against the Canadian dollar, and you can see a good move to one side. You can see that one-sided move by just drawing a trend line. You can see a good one-sided move. So for me, the economic calendar is literally a reader for you to be able to, it's a radar and a reader. You can read the charts quickly by looking at the economic data, and you can tell yourself, okay, this is what I should be looking for in the market when I go in there. That is exactly what I plan to be doing going forward. Look at the economic situation. Does it make sense for me to be buying? Go into the chart and I'm just looking for buying opportunities only. Now you may be wondering where I get all of this information from. So this is what I did. I simply went to the not so popular one. It is popular but not so popular to Africans. We all know of Forex Factory, but I do not use Forex Factory for this situation. Instead, I use investing.com. The economic calendar here is absolute, like it is key, it is nice, it is beautiful. It has a lot more information than the Forex Factory because especially something called the COT data, the CFTC release. I have to go to the CFTC website to get it every time, but over here on investing.com, I find it right here. So I'm going to head on to any Friday of the week, any Friday of the month. This was the last Friday, and you can see it right here, CFTC data for speculative trading. You can see all the CFTC speculative position listed out every Friday. This tells me cleanly what direction the big traders are going. Now, apart from me doing this chart analysis, or rather this concise analysis, I have a way of reading this analysis even deeper by getting the information from where exactly the Power BI is reading it from, which is my fundamental analysis Excel sheet. So what I do is I take the news, I simply copy the news from the page and paste it here. I then filter it into the different economy. You can see the economy one after the other down here before I create the overall dashboard. And these overall dashboards with the 14 days dashboards and the changes is what this information is read from. However, if I want to do a proper deep dive, for example, the Euro Swiss franc, I want to do a clear deep dive into it. I cannot just sit down here and do a deep dive from here. I can also go down to my book and now go to the euro, knowing fully well that the issue I'm having here is the lagging situation. I'm going to go into the lagging situation, and in the last 14 days I'll simply filter for greater than or equal to less than or equal to 14 days, and you can see the last 14 days has printed heavy bullish strength, which is exactly what this 14 days change here is showing, and is exactly coming from this table right here. So this table is the table that tells me, oh, okay, there's strength coming in recently. You can see the CPI inflation data. You can see this means inflation is dying in the European space. It's not now it's dying like it's dying, but it's getting better. They are having, better information. Same thing with the PPI. The only thing they have like small bad news with is the energy and food year over year, but month over month they're doing better. Compare that with the Swiss franc, where if we filter out for only the lagging indicators and you go down for the last 14 days, well, you can see instantly we have only bad news coming out for the inflation and its unemployment data. So this is how I personally analyze the market on my own. Created this dashboard after a long time. It wasn't easy, it was a lot, but I was able to do this in 9 hours plus because I have done it twice before. I have done it with the COT data before, I have done it with another trade finder, I've done it with a second trade finder. So it has become easier for me to be able to quickly interpret this data over time, and I hope to get better over time. So should you. I hope you enjoyed this video. I hope you enjoy watching and enjoy the next video on the screen. You can pick any of them for your entertainment or for educational purposes. Thank you for watching, and see you all on the next one.